Ladies and gentlemen, good day and welcome to Shalby's Q4 FY'24 earnings conference call hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Dr. Bino Pathiparampil from Elara Securities. Thank you and over to you, sir.
Thank you, Steve. A very good evening to all of you on the call. On behalf of Elara Capital, I, Dr. Bino Pathiparampil, welcome you to the management call of Shalby Ltd to discuss Q4 and FY'24 earnings and business outlook. We have the top management team of Shalby present in the call. I now hand over to Jigar Todi from the IR team of Shalby for opening remarks and taking it further. Over to you, Jigar.
Thanks, Bino. Good evening, everyone. Our earnings presentation is uploaded on the stock exchange website and our company website, shalby.org. We do hope you have already had the opportunity to go through the presentation. Please note that some of the statements made in today's call may be forward-looking in nature and may involve risks and uncertainties. Kindly refer to slide number 43 of the investor presentation for the detailed disclaimer. Now, I would like to hand over to the call to Chairman MD Dr. Vikram Shah for his opening remarks. Thank you and over to you, sir.
Good evening, friends. Very warm welcome to earnings call of Shalby Ltd. Today I am happy to share with you that this has been landmark year as Shalby as an institution has completed 30 years of operation. 30 years ago, our first hospital was created out of vision and relentless determination to provide quality health care. I can still recall the complex hurdles that we faced, the financial struggles, the uncertainties of the clouded path. However, with every challenge, we grew stronger and more resilient through sheer perseverance and unwavering dedication. We turned adversities into the opportunities. Today, as I fondly recollect those early days, I am filled with immense pride. Our commitment to excellence has not only led to best clinical outcomes but has earned us trust and gratitude of our patients. Our growth is not just in numbers but in the lives touched and the communities served. And as we look ahead, we carry with us the lessons learned from our humble beginnings. This would not have been possible without support of each and every Shalbyite who have always played important role in this journey. Needless to say, the growth of the company is intricately woven with the support and contribution of the shareholders and all other stakeholders, each playing crucial role in our journey towards success. The company continued to show steady performance in FY'24 with revenue of 953 crores and EBITDA of 197 crores. This translates into growth of 15% and 23% respectively from last financial year. The acquisition of Delhi NCR Hospital marks a significant milestone, bringing our total tally of 16 hospitals in the coming year. We will be operationalizing the Rajkot Hospital and also begin work at landmark Mumbai project once we receive handover from the trust. The implant business has made considerable strides across various aspects encompassing supply chain, expanding customer base, operational efficiencies and augmented management bandwidth. Deepak will provide you a comprehensive overview of development in implant business. Now, it gives me immense pleasure to introduce Mr. Deepak Anand, who has joined our group as a Global Chief Business Officer on 9th January 24. and presently he is in USA and handling call from USA. Will be talking about implant business. He holds degree in engineering from Mumbai University and management degree from Mumbai Management Institute, and he is alumni of INSEAD, and he has 2 decades of leadership experience in medical devices, telecom, IT and EdTech as a variety of leadership roles. Over to Deepak for further communication, please.
Good morning, good evening, everyone. Thank you so much, sir. And let me just give you a quick brief about our implant business. Our implant business has delivered another consecutive quarter of positive EBITDA in Q4 financial year 24. Because of the growth that we have seen in this quarter, along with continuous improvement that is happening through process improvements in the production shop floor, us securing much improved procurement prices from our multiple vendors, and we now having a very tight control on our operational expenses. During the fourth quarter of this financial year, our implant business made a significant progress, generating revenue of 258 million INR, with contributions from the USA and India at 41 and 59% respectively. In Q4 financial year 24, our US customer sales mix from retail and wholesale remained at 51% and 49% respectively. We are actively focused on bolstering our team with skilled professionals, transitioning our sales mix to retail customers from wholesale, enhancing operational capacity and efficiency, expanding our product pipeline through extensive research and development efforts, and significantly reducing procurement costs. The reception of our Shalby consensus implants in our hospitals has been highly positive, and we have received additional orders from the Indonesian markets. If you look at the focus for us from the financial year 24-25, we are looking up into 4 pillars that we have strategized, which we will be focusing on, where the pillar 1 is towards sales. In sales, in the US, looking at coming on board to get an $8 million from the current year, we closed at about $4.8 million. We're looking at getting this by onboarding more distributors, sales team, as well as marketing efforts. We will also be participating this year in a lot of large congresses. We would be initiating a digital marketing campaign in the US in the next 4 to 5 months to come. Inside the sales pillar, outside US sales, we will also be looking for another $8 million through the right products across Southeast Asia, Latin America. We're looking at about 4 to 5 countries in Latin America, Russia, and especially countries where the reimbursements are higher at this juncture. Right. We have significantly taken efforts to put capex for these particular initiatives on the sales front. Looking at the pillar 2, which is on the COGS reduction, we are looking to end the year at about an approximately COGS of about 50 to 55%, which is right now upwards of 80%, by improving our efficiencies, shift times, new vendors and suppliers, and processes. Just wanted everyone to know this is an 8 to 12 month process from the time you identify a new vendor or a supplier or any efficiency change. The process takes 8 to 12 months, fundamentally, right from putting the plan across, getting the QMS done, getting the regulatory approval for the new vendor and the new supplier, and then going by it. So a lot of initiatives have been taken in this direction, and we will be able to see quarter-on-quarter results starting to come into this place. The third pillar, which is super important for us, and that's also one of the reasons why there have been slight delays in what we had to achieve, was capacity increase and to build a dual supply chain system. Currently, for most of our products, we were dependent on one vendor or one supplier for the material. So hence the cost becomes high as well as the business gets affected because there is only one supplier. So plan is to have a multi-vendor supply system with higher capacity, contributing to our sales forecast as well. And as soon as the higher volume commitments comes in for increasing our sales, we will also be able to lower the costs as well as increase the capacity. This will also help us to build a business continuity or contingency around not having a single supply chain system, but a dual supply chain system. And the last pillar that we want to work on or we'll be focusing on is new products. We've also looked at new product initiatives. We've just hired a head of engineering, very experienced and senior person from the industry of orthopedics, who's come on board to build our new product initiatives. The new product initiatives we would be looking at into three parts. One is the new product launch that is around the corner, which is CKS Gold, Ambition, Tux Gold, which we are expecting to launch in this financial year. The second part of the product would be improvements in the current system, just adding a couple of SKUs into our current products, just adding a couple of sizes, improving our instrument sets. There is a huge growth of ambulatory service centers, surgery centers coming up in the US, and hence creating a system to cater to the same. That will help us to cater to the current sales needs. Having said the same thing, even for any of these kind of small improvements, the process is about 6 to 9 months, and sometimes in some cases even 12 months, right? And the third part of it from a new product would be to completely focus on new design, which is a 2 to 3 year project, where we kickstart in terms of looking at revision portfolio for knee, revision portfolio for hip, a medial knee, a dual mobility, all of them coming into picture, right? So sales growth, COGS going down, capacity being built for driving growth, as well as new products coming into picture, will put us not only for the short term, but also in the long term in an excellent spot. That's an update from my side on the implant front. I would like to hand over the call to Mr. Amit Pathak for company's performance remarks in this. Thank you, and over to you, Amit.
Thanks, Deepak. Good evening, everyone. I'm pleased to welcome you all to the Shalby Ltd fourth quarter FY 2024 earnings call. Now, I will walk you through the financial performance of your company for the fourth quarter or FY 24. Consolidated revenue of rupees 249 crores in quarter 4 FY 24 versus 208 crores in quarter 4 FY 23, and we have grown by around 20% on YOY basis. EBITDA of rupees 44 crores in quarter 4 FY 24 versus 35 crores in quarter 4 FY 23, with a margin of 17.6% in quarter 4 24 versus 16.7% in quarter 4 23, and we have grewn by around 26% on YOY basis. PBT of the company is at around 21.8 crore in quarter 4 24 versus 19.2 crores in quarter 4 FY 23, with a margin of 8.7% in quarter 4 of this year versus 9.2% in quarter 4 of the last year, and we have grew by around 13.5% on YOY basis. PAT of the company is 16.04 crores in quarter 4 FY 24 versus 13.9 crores in the last quarter of the same year, with a margin of 6.4% in this quarter compared to 6.7% in quarter 4 FY 23, and we have grew by around 16% on YOY basis. For an overall year, in FY 24 versus 23, our sales have been grown by around 15.2% in consolidated level, EBITDA is 23.3%, and PBT is 25.7%, and PAT by 23.4%. On the consolidated basis, the group is maintaining a very strong balance sheet and low gearing ratio at 0.16x. That is the derivative of equity of 1,000 crores and net debt of 156 crores. Now I will be running through the standalone performance of the hospital business. The standalone revenue is around 211 crores in quarter 4 FY 24 versus 184 crores in quarter 4 of FY 23, and we have grew by around 14.5% on YOY basis. EBITDA at 42.6 crores in quarter 4 of this year versus 36.5 crores in quarter 4 of last year, with a margin of 20.2% in this quarter versus 19.9% in quarter 4 of the last year, and we have grew by around 16.9% on YOY basis. PBT of the company is 32.5 crores in this quarter versus 26.5 crores in the quarter 4 of the last year, with a margin of 15.4% in this quarter versus 14.4% in the last quarter of the same year, grew by 22.7% on YOY basis. PAT of the company stands at 22.6 crores in this quarter versus 18.4 crores in the last quarter of the similar year, with a margin of 10.7% in this quarter versus 10% in the same quarter of the last year, and we have grew by 22.9% on YOY basis. For the full year, the FY'24 versus FY'23, our sales has grew by around 17%, EBITDA by 22.8%, PBT by 30%, and PAT by 28.5%. Again, at the standalone level, we continue to maintain a very strong balance sheet with a positive net cash balance of rupees 22 crores. With the operating leverage kicked in and growing with asset-light approach, our standalone ROC has improved to 18% in quarter 4, FY'25-24 on an annualized basis. Further, from 2017 onwards to till date, our standalone revenue has grown with a 25% CAGR and EBITDA at 30% CAGR basis. On the operational side, the inpatient, outpatient and surgery count has grown in the range of 15 to 16% on YOY basis. ARPOB and ALOS are showing excellent improvement at a 39,101 and 3.7 respectively compared to 34,867 and 4.01 in the same period of the previous year. ARPOB on YOY basis has grew by 12%. The number of occupied beds has increased by over 10% on YOY basis as an occupancy rate of 46% in quarter 4 of this financial year due to acquisition of Sanar Hospital in NCR region. The payer mix for quarter 4 2024 is at 37% for the shelf, 41% for the insurance, and 22% for the government business. Our NCR Delhi deal for the acquisition of Sanar Hospital has been concluded in quarter 4 2024 with a total investment of 206 crores. In this deal, we have acquired the operational hospital, Sanar Hospital, at a value of 102 crores for the 87% stake by way of primary and secondary acquisition, and Healers Hospital, which own the land and building on which the Sanar is getting operated, with 100% acquisition by way of secondary purchase at rupees 104 crores. Now from investment point of view, our capex investment for the acquisition for the Delhi NCR region for Sanar Hospital is concluded, and in future the capex will be incurred for the capacity expansion from the 130 beds to 200 beds in the coming years. Post our acquisition, we have consolidated the performance of Sanar for the part of the year, that is from 25th of January, that is the date of acquisition, to 31st of March. The revenue for consolidated period is rupees 16 crores with a EBITDA of around negative 0.17 crores, that is 17 lakhs in our consolidated result. Revenue from international business remain at 13.6 crores, that is 2.8 crores from Shalby Hospital and 10.8 crores from the Sanar in quarter 4 24. The overall international revenue from Shalby is at 9 crores and the Sanar was 67 crores in FY'24. I am happy to mention that the acquisition of Sanar, our international presence in other new geographies has been increased, and now we have 23 OPDs as a group across the various international locations. I am very hopeful that with this strategic location will help us to increase our international hospital revenue significantly in coming years. At Shalby, our undivided focus has been demonstrating our clinical excellence through successful execution of many diverse critical surgeries in several of our hospital units. We also take a pride in sharing that we have successfully completed 46 transplants, which include 28 kidney, 12 liver, and 6 DMT during the quarter 4 of this financial year. Further, our franchisee business delivered an adequate performance in quarter 4 of this year. The total 393 surgeries has been performed at SOC units, that is the both operated and managed in the quarter 4 of this year. The revenue from FOSO business is at around 1.74 crores, grew by 28.5% of the YOY basis. The revenue from the FOSO business is at 0.8 crores, grew by 9.7% on YOY basis. We are proud to say that we have generated around 6.7 crores of the COSM revenue and 3.6 crores of the COSO revenue with a 48.5% and 22.1% growth respectively on the financial year 2024 basis. Our next franchisee location at Rajkot is in satisfactory progress and is expected to get operationalized tentatively in the current quarter. We have been incredibly sensible, selective in our choice of potential partners from the many inquiries we are receiving so far for our franchise operation. To maintain the reputation of our strong brand, we follow a clearly defined process and strict criteria when making this selection. Looking forward, we have a strong sense of optimism about seeing positive development in this upcoming quarter of the fiscal year. Our primary focus remains on utilizing our expertise and excellence in orthopedics with the goal of establishing more than 40 franchises in India in the next 4 to 5 years. Now for our home care business, we have served 30,496 patients in this current year versus 27,000 patients in the last financial year with a growth of 13% patient count in the similar period of the last year. Revenue from home care business is at 14.5 crores for this current year versus 9.8 crores in the last financial year with a 48% growth. As a part of our social commitment, we continue to spread awareness about the importance of health and well-being through videos, through various social media platforms and created 90 plus healthcare videos. We also conducted more than 305 plus healthcare campus and 145 plus healthcare talks across all our units during the last quarter as a part of various community outreach programs. Shalby also takes pride of nurturing young talent through our Shalby Academy verticals with 1,700 plus students registered in the various healthcare programs during the current year. We would like to inform that Shalby Academy has successfully rolled out BBA HSM with SVGU University and MBA HSM with the Ganpati University. The new students have been registered for various academic courses like lab technician, OT technician and others. The enrollment process is still on. Over 206 enrollment for the team Indore, which is the uppermost in the academy by any single team since the inception. Total academic enrollment for this financial year is 313 numbers. Our implant business has delivered the positive EBITDA in fourth quarter of current year due to continuous improvement in operational efficiency and better procurement cost. The revenue is at the moderate level of around 26 crores in this quarter compared to around 24 crores in the quarter 3 of the last financial year. In terms of the capex, for the current year, at Shalby level, we have invested close to around 28 crores of the capex, which includes 8 crores in terms of the intangibles, 5 crores for the building improvement, and another 16 crores for the medical equipment. Out of the 16 crores of the medical equipment, close to around 6 crores is for the upgradation of the medical equipment, 7 crores is the new equipment, and 2 crores is the replacement of the equipment. We are also like to say that we are going to invest heavily in the capex in the next coming years, and we are planning to invest around 36 crores of the capex for our existing unit in terms of the new and the replacement of the capex. Along with that, we are going to install 3 Linac machine at our 3 locations. That will be close to around 65 crores. That will contribute highly in terms of the top line and profitability of the company. Now I will hand over the call to the operator to open the floor for the question.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Ranodeep Sen from MAS Capital. Please go ahead.
Thank you, sir, for the opportunity and congratulations on glorious 30 years. My question is to Dr. Vikram Shah. I think one of the business channels did a profiling on you in Jan, and it was incredible to know that you've done 1.5 lakh operations till day, and you almost do 20 to 25 surgeries in a day and 6 days for a week. And I think you have done an incredible role in changing the perception about the knee operation. So my question is, sir, how do you institutionalize this in Shalby? I know it's tough to replicate your credentials, but is there a way we are trying to institutionalize this in Shalby, which will lead to exponential growth of Shalby and eventually leading to a higher market share? Thank you.
Sure. Thank you for the question. Dr. Shah, is in the OT, but he should be back in a couple of minutes and should be able to answer the question. But let me tell you what he has attempted to do and how we have been able to successfully institutionalize it, because it's a good question. So as we speak today, about 15 years ago, when we started the first corporate multi-speciality hospital, all the surgeries were performed by him and, done by him and his team, his close team. As we speak today, only 20% of the arthroplasty surgeries are done by him, and the balance 80% are done by, the surgeons across all the different hospitals which we have. So, essentially, to that extent, he has been able to successfully institutionalize his practice, and, a lot of 80% of the patients now come in to get treatment for the knee or the hip replacement surgeries at Shalby, right, and not a particular doctor.
Sure. Appreciate that. Shannon, my next question was on Sanar acquisition. If I'm not wrong, we mentioned that 70% of the top line generated there is from international business, and ARPOB is at 1 lakh. With these two metrics, any specific reason why we had a negative EBITDA for the last quarter?
Sure. So Sanar, if you can see, the time we have taken the Sanar, it's a good deal for us. Okay, the company are into the CAT-scan situation, and we are ramping up the business now. There are a lot of spending which is happening into the company, which is on the higher side, and we have start controlling. If you can see the overall performance, the loss was pretty high into the Sanar compared to the time we have took over. So we are happy to say that within 2 months we have just operationalized in a way that we are at the break even, and from the next quarter onwards we are definitely going to see the positive EBITDA in this company.
Sure. And if I can squeeze in one last question, we had an aspiration for our implant business to grow from 100 crore to $100 million. Are we on track for that aspiration? Thank you.
Absolutely on track on that. The way I would put it across is, it's a $30 billion market globally, and $100 million is still a small number that we can go behind, but we are on track to it on multiple things. At the end of the day, we could only do that if you have the foundation and the fundamentals strong. So like what I mentioned, building the right supply chain system, building the right cost efficiencies, right COGS. Without that, growth at any cost will not make sense, and hence that's the reason why you see these foundations are being laid out very strongly. And once these foundations we have in place, we're 100% on track to that.
Aspirationally, which year we plan to hit that number?
We're looking at about 5 years from now. Is that right, Amit? That's what it is, right? 5 years, yeah. 5 years from now.
Sure. Thank you, and wishing all the best for the next financial year. Thank you.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may please limit your questions to one per participant, as there are several participants waiting for their turn. The next question is from the line of Rohan from Anand Rathi. Please go ahead.
Hello. Am I audible?
Yeah, you are.
Yeah, congratulations on a good set of numbers. So I just had a couple of questions. Firstly, we said in the commentary that we experienced a 12% growth in ARPOB on a YOY basis. So I just wanted to understand of what were the major reasons that led to this growth. Did we take any price hikes, or was it largely led by volumes, or
Yeah.
how are
So,
we supposed
we should not look at YOY from the ARPOB perspective, because, a little bit of case mix, as a little bit of case mix changes, you can expect, the ARPOB to significantly move. But if you see the annual ARPOB difference, it's been, the growth has been about 2 to 3%. So it has not been so significant.
All right. My second one was about the Delhi CapEx that you mentioned in the commentary. So we are planning to add around 130 to 200 beds. So what will be the amount that we'll be incurring for that particular thing?
Yeah. So at this point of time, our full focus is how to kind of increase the occupancy in the existing 130 beds that we have, operational, right? And we are already working on a plan on how to add another 50-odd beds in this hospital. So we are working with consultants, architects, and other agencies. But at this point of time, the full focus will be on how to kind of get to a higher occupancy in this existing hospital, which already we are seeing a significant growth over the last 90 days since we've acquired it.
Okay, thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Bino Patiparampil from Elara Securities. Please go ahead.
Hi. Just a question on the Nashik and Mumbai Santa Cruz projects. What's the latest update there, and what are the timelines looking like?
Yeah, sorry, I didn't get the second part of the question.
Timelines. Yeah. Timelines, and what's the current status and what are the timelines?
Yeah. So, I think what has happened is there has been a delay in the project because of the trust's end. And, they are at this point of time working internally, and they need certain documentations done, including taking the approvals, from the necessary authorities. So they are in the process of that, and we are expecting, that in the next couple of months, we should be able to get the approvals. And once the approval is done, the handover will be given to us. And then from that point of time, we will be in charge, and we will have to, get the BMC approvals and start working on the project.
Understood. So maybe we can say it would start around a year from now, maybe another 2 years of construction. So maybe 3 years before we have a full-fledged facility. Is that right?
Yeah. So based on the last discussion with the trust authorities, we were told that, the approval should be in place in the next 2 odd months. So if that is the case, then, things can start a lot earlier as well.
Understood. And Nashik?
Well, Nashik is, another project. However, there, we were supposed to get the handover for the hospital, which was to be constructed by them, and they were going to then hand it over to us. So, which has still not happened. So, we have written to them at this point of time to, kind of confirm when they will be able to deliver and hand over the project to us. So we have not heard from them yet, but as such, there is no capital employed over there from Shalby Ltd. So from that perspective, we are okay.
Understood. And what would be the capex, total capex in FY'25?
So, I just mentioned, we are looking forward for the Shalby, and we are talking about we are going to invest close to around 36 crores for our hospital business. And apart from that, we are going to invest about 60 to 65 crores for 3 linacs at 3 locations.
Understood. Yeah. And one last question on tax rate. So we are running at the console level around 34-35% tax rate. What would be the console tax rate outlook over the next 2-3 years?
So it will remain on the same line. Look, if you are looking after the tax that comprise the two parts, one is the deferred tax is also created on couple of entities. Okay, for our implant business, when we are consolidating under India, we have to create the deferred tax asset. But overall effective tax rate will going to remain the same. From Shalby point of view, we are under MAT right now, and we are going to utilize the MAT by the end of the next financial year. Thereafter, we will be under the normal tax rate.
Understood. Thank you very much.
Thank you. The next question is from the line of Pinaki Banerjee from AUM Capital. Please go ahead.
Yeah. So thanks for the opportunity. So my first question is regarding the implants business in the USA. You had some supply side issues from the vendor. So sir, actually where you had taken a conscious decision to change the vendor. So sir, what is the status now of that problem now? Has it been resolved?
Yeah. So from an implant standpoint, the supply vendors are on track. So we have been able to figure out new vendors and onboard them. But the reason why you see a slight delay in all of those things is because a new vendor comes with a certain process. So from the time you identify a vendor, the quality checks happen, the QMS process happens. Every time you change a vendor, you have to also get a regulatory approval once again. So that whole thing of getting is what is taking time. Having said the same thing, it's an ongoing process. We are better than where we are, but we still are building more robust supply chain systems so that we don't end up in the same position. But just to answer your question short, from where we were to where we are, yes, there has been a improvement on that.
Okay. Sir, and one second to last question. So with the Sanar acquisition, actually we find that it is in the slide 19 it is mentioned that it is a hospital which is expertise in liver, kidney, blood and bone marrow transplant, which is a deviation from the orthoplasty segment where you are a leader. So sir, is it fair to assume that whatever acquisitions, organic or inorganic you are looking, you would be looking to diversify in other specialized fields now from now on?
Well, even if you look at Shalby Hospital's revenue mix, about 60% plus of the revenue today comes in from other specialities, right? And cardiology, oncology, critical care, urology, nephrology, contributing significantly to the balance 60-odd% of the top line. Okay. Having said that, in Sanar, of course, they are doing a lot of high-end quaternary care work, such as bone marrow transplants, liver transplants, kidney transplants, and among other specialities. So we will be looking to build on that, in terms of the domestic and international business. We will also look to take some of this high-end work, which we are not doing currently in some of the other hospitals of ours across the country. And at the same time, there is another synergy, which is that, for orthopedics, the Sanar Hospital was not doing a significant volume of work. So, with Shalby coming in, we'll see the orthopedic numbers also grow at the Delhi NCR hospital.
Okay, sir, fine. That's all from my end, and thanks and all the best for the future.
Thank you. The next question is from the line of Rohan Vora from Invasion Capital. Please go ahead.
Hello, am I audible?
Yes.
Yes. Thank you, sir, for the opportunity. So, sir, my first question was around the FO and FOSM model. So, just to understand what we are doing to scale those two models and adding partners there, adding franchise there. And another question was, I just missed your guidance on the implant business. So you said $8 million plus $8 million. So just wanted to confirm if it was $16 million. Thank you.
Sure. So Deepak, do you want to start with the implant business?
Yeah, that's right. So we're looking at about 16 million this year with 8 million in the US and 8 million OUS. That's correct.
Okay.
Yeah, in terms of the franchisee business, we already have 5 operational franchisees, and the Rajkot franchisee will be operational in Q1 or Q2 of FY'25. So, we are in the works of building this business. We are also looking at opportunities right now. Of course, there is a funnel, and, we are talking to several other franchisees across the country. We are in line to kind of do between 30 to 50 franchisees over the next 3 to 5 years, as we've guided.
Sure. Thank you.
Thank you. The next question is from the line of Surya Patra from Phillip Capital India. Please go ahead.
Yeah, thanks for this opportunity, sir. Sir, my first question is about the implant business. So did you say in the opening remark that you are looking to see a kind of improvement of almost like 30% in the COGS this year, or it is your future target?
So we will be looking at that particular cost structure coming into picture, but it will be an eventual one. By end of this year, you would have seen that kind of a reduction. So it will happen gradually, based on how each one of these new suppliers and vendors and stuff start coming on board. But the reduction of 30% is what we are gunning by end of this year. So by the last quarter, you would have seen that COGS going down by about 30%.
Okay. So then for FY'26, a kind of optimal margin structure should we target at for the optimal for the implant business? Or
That's
if
correct.
you can give
So
some
if that happens in the last quarter, then that will continue for the next year. Yeah.
Okay. Okay. So given that, what profitability one should think about for FY'26?
Amit, do you want to step into that?
Sure. So look, we have a very clear 5-year plan, what Deepak has briefed, and the way we are seeing the profitability improvement into our implant business. We are seeing in FY'26, we are on the higher single digit growth. We will be close to around 9 to 10%. And going forward, close to around 28, 29, we will be close to around 18 to 20% of the margin.
Okay. Okay. My second question is about the ARPO. See, in fact, while we have seen a kind of improvement in the current financial year versus last year, for the company as a whole, what should be the kind of goal that, in terms of upside potential, that we are anticipating, and do you given the kind of a policy development what is talked about, so is there any risk to the ARPO generally in the near future?
So, look, the ARPOB has been, for the year, it has grown by about 2 to 3%. Generally, we see that in a year we kind of do not increase, the prices, at one go. So, every quarter we relook at the different pricing structure across, the different verticals, and then, accordingly we kind of increase the prices in a structured manner over every quarter. And overall, we don't see that, this should significantly change, because I think what is important to understand is that this is also subject to the case mix, the specialty mix. So, since our specialty mix has been in a certain range over the last 8 to 10 quarters, we have not seen the ARPOB move much except for by 2 to 3%. Coming to regulatory risk, I think Shalby is, probably going to be the least affected, because, if you look at our ARPOBs, they are one of the, of course, they're one of the highest in our region. But having said that, if you look at most of the major players who are in the metro cities, the ARPOBs over there are much higher. So, from that perspective, we are already in a very comfortable range. However, we don't see any of that, coming in the near future, as already, the hospitals are making, not so high ROCEs that there is any scope for reducing the package prices for the patients.
Okay. And just lastly, about the home care market, sir, or business. So for the full year FY'24, what was the kind of progress and the business that we have seen, and what it can be achieving in the following years?
The home care business has grown by nearly 50%, for us in the last 1 year. And we have always said that, the potential that we see. So we are currently doing the home care business in all the cities where we run hospitals. And, we maintain what we've said earlier, that, the potential is nearly 5% of the hospital revenues is what we could do, if we are able to kind of penetrate across, all these towns where we are operating our hospitals. So, say we did about 850 crores of revenue last year, we can do about 40 odd crores, in the home care business.
Okay. Sure, sir. Yeah, thank you.
Thank you. The next question is from the line of Kashish Thakur from Elara Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. First question, sir, I just missed your commentary on international revenue which you have generated, international patient revenue which you have generated for FY'24. Can you just help me out with the same?
So can you just repeat the question?
International patient revenue which you have generated for FY'24.
Yeah. So FY'24, for the Shalby existing setup, we have around 9 crores of the international revenue, and Sanar has done close to around 67 crores in this last financial year.
Okay, thank you, sir. So the next question is, like, if we see historically, our EBITDA margins for Q4 has been suppressed. For Q4 FY'22 is somewhere around 15%. For Q4 FY'23 is somewhere around 13%, and this year it is somewhere around 16%. So, like, any specific reason why our Q4 margins have been suppressed?
Well, the Q4 margins, as such, the EBITDA margins have not dropped significantly. So if I look at the EBITDA margins for the year, I mean, for the quarter, they have been at about 20%, 3% lower than the annual average. So usually what happens is that there are two things. One is, of course, most of the doctors' incentives, are released in the fourth quarter. And in this particular quarter, we also had, 30 years of completion of Shalby. So the marketing spend, which is usually about 2%, of the top line, has been at 4% in this quarter.
Understood, sir. So going ahead, what kind of marketing spends can we expect for FY'25?
The marketing expense will continue to be in the range of between 1 to 2% in total.
Understood, sir. Thank you. That's all from my end.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 at this time. Thank you. As there are no further questions from the participants, I would like to hand the conference over to the management for closing comments.
Thank you everyone for joining the Q4'24 earnings call. We will meet quickly into the next quarter with a good result from the Shalby side. Thank you for your patience and participation.
On behalf of Elara Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.